Welcome back to ICT Trading Concept. How are you all? Here is the A++ setup. I believe that you all are looking for here. So I'm gonna go with the A++ setup. Okay? Here just three rules you have to follow. Then everything is clear. When I'll be inside this video, you will understand the best setup ever, which will work most of the time. You have to stay until the end of this video and trust me, I promise you everything will be changed. The way you look for the chart, the way you look for the setup, it's going to be changed for forever. So I'll go just with three rules and I will go one by another. Over here, I will stay here in Nasdaq and I will just explain the Friday candle. That means this candle. I'll just explain the Friday candle. So every opportunity or setup I will explain through this Friday candle. Okay, this is daily chart. The first rule is go to your daily chart and find out the interest point or depend on weekly bias. What do I mean by that? If you have already done the weekly bias or weekly analysis around the weekends, I mean Saturday or Sunday, you already know which is your direction from Monday. If you don't do it, then you have to go to daily and you have to look for daily chart and you have to look for the daily, liquidity level or fair value gap, anything you have to look for. Now I have done my weekly analysis in Sunday. Now it's nearly impossible to go through that whole analysis for the weekly analysis. So I will stay here in daily chart. This is that Friday candle. Look over here. What do you see? Where was market in Thursday? Market was over here. What it has done? It has taken that high. Okay, so that high has been taken out. When it has taken that high, what do you see this? This is the shallow run. What did I tell you about the shallow run? If you ever see the shallow run, mark the highest high as your buy side liquidity because it is called the obvious liquidity. Market has to take that obvious liquidity. At the same time, it is actually the all-time high. Okay, so all-time high is over there, the new all-time high. In Friday, my expectation was market will go toward that buy side liquidity. It doesn't need to take that buy side liquidity. All I need is just a run toward that buy side liquidity. That was my expectation. What else do you see? There is your daily fair value gap. This candle low, this candle high. So this is your daily fair value gap. Now over here, if you can see this daily fair value gap, this is the easy way, right? Like just look at this daily fair value gap. Very obvious. I went I went through my Twitter and I told that market is going to reverse from this level or that level. I just marked three level, okay, and the 50% of this daily fair value. That means this line, okay. So I told that market is going to reverse from any of these three level, and finally market actually reversed from the upper level, and it gave me the setup. I will explain everything at the end, okay. So what is your first job? First job is go to your daily chart and look for the interest. First, you have to look for the daily liquidity. Where is your daily liquidity? Here is your daily liquidity. How do you find your drawn liquidity? You will go with relatively equal highs or relatively equal lows. Market is over here. Do you see relatively equal highs near to you or relatively equal lows near to you? In my opinion, from here, the relatively equal highs is very near to me. So I will go over there as my point of interest. Okay. Now, from where it can reverse? It can reverse from this fair value gap, okay, this daily fair value gap. I actually, for extra confirmation, I marked the order block, but yeah, still this daily fair value gap is perfect. So you got your daily interest point and from where market can reverse, you have both of those level. Now let's go to the second rules. Go to your hourly chart or 15-minute chart for liquidity and fair value gap. So same thing again. Now I love 15-minute chart. If I don't find out anything from 15-minute chart, then I actually go for the hourly chart. So over here, I'll stay here. This is that Friday. Okay, don't forget this is this blue line and that blue line. Inside all of this price action, this is from Friday. So we are here in Thursday already. We don't know what is going to happen in Friday. So you have to mark your point of interest from, your buy side liquidity and the fair value gap. Now from daily chart, I know my bias is bullish. I'm going toward that buy side liquidity. Okay, so I will be mark any fair value gap over here so that price can go over there. Then it can go toward that buy side liquidity. That's my interest. So over here you can see this is the last fair value gap and prices over there, it reversed from a random area. This is just a random area. Price reversed from a random area, but below this area, I have this very nice fair value gap from 15-minute chart. So I'm gonna mark that 15-minute fair value gap, and I'm gonna keep it until here. So this is my 15-minute fair value gap. At the same time, I'm gonna remove this daily fair value gap from my chart because you saw it worked over here, and this is that order block level. You can see how precisely price just tap to that order block. Remember, this is that daily order block. What did I show you here? This line, okay? This is that order block level. So I'm gonna be in 15 minutes chart. Just look how beautifully it tapped to that daily fair value. So I don't care about the weeks. I care about the bodies. Just look, nobody break that daily order block, and how beautifully it came here, then boom, went higher. So I'm gonna remove that daily order block level as well because I have this 15-minute now, and I am expecting that. I mean, what is the rules? You have to mark the 15-minute fair value gap and the buy side liquidity. Now over here, when you are here, you have to look for the buy side liquidity. What do you see? You have this extreme buy side liquidity. Okay, this is your extreme buy side liquidity. At the same time, I can see relatively equal highs. See all of these highs, they're relatively equal highs over here. So this is our relatively equal highs. Now market is over here, okay, in that line. This price action is not yet on your chart. So I can mark this high and all of this high as my relatively equal highs. So this is my buy side liquidity. So I'm gonna mark that buy side liquidity, and I'm gonna keep it until here. I don't need to go hourly chart because from 15-minute chart I have got this very nice fair value gap. So last fair value gap from 15-minute chart I have got that. I don't need to go to hourly chart. So let's see what is the last point. Go to your 1-minute chart and look for your setup model and target profit. So this is the last part. First, you have to wait when you are inside this Friday range. You have to wait to price reach to that 15-minute fair value gap first. So this is the first time when price reach into this 15-minute fair value gap over here. So before this line, this candle, whole price action, you have nothing to do because your bias is bullish. Market is going against your bias. You will just sacrifice all of these things. You are going to sacrifice them. Okay. Now you will wait when market will be here in this 15-minute interest or fair value gap, entry fair value gap, or the last fair value gap. You will start to look for your buy. Okay. This is the part where you will look for your buy. Now when price came here, before coming here, it has made another high. See that relatively equal highs has been taken over here. But at the same time, this is the shallow run. So I'm gonna mark that shallow run as my buy side liquidity. Okay. So this is my buy side liquidity. I'm gonna mark that here. When price came here, this candle, what do I have? This clean buy side liquidity. I don't need to hold it until that extreme buy side liquidity. I can go until that buy side liquidity. Okay, that will be my target. Now let's see what price is done. When price came here, I will go to 1-minute chart and I will look for my entry model or setup model. Okay, what is my entry model or setup model? I actually tell you to go for the liquidity taken, market structure shift, fair value gap entry. That's the best thing I can tell you. Okay, the best way to take the entry. At the same time, you have to wait for the session. That means from 9:30 the morning session starts. So whole of this price action you are going to ignore because it is outside of the AM session. You see, this is the end. Let me put it to the AM session where the AM session is started. Okay? So actually, the AM session started around here at 9:30. Okay, so this is the AM session started. This price action you are going to skip. You don't need to attend to that price action. Okay, so 9:30 your entry, you will start to look for your entry. Now price came here around 9:30, went little lower. Here, was there any market structure shift? Every single time I'm just looking for a market structure shift. Now I can see there is no clean market structure shift. You can go for that as your market structure shift, but I'm not absolutely not agree with you. So I'm not going toward that market structure shift. Okay. So I prefer that market structure shift or 22 YT model to look for your entry at your beginning. But later you will be able to take your entry through breaker block, order block, or any other entry opportunity. Okay, you will be able to do that. But at your beginning, you should go for the 22 YT model. It will help you to understand the whole price action better. Okay. So you will look for that 22 article, that is market will take some liquidity, market structure shift, fair value gap, immediate reaction, it will go toward your buy side liquidity. You can see market was never gave you that market structure shift. Okay. So in the until here, there was no market structure shift, and finally I got this market structure shift here, but market never trade that fair value gap, and that's why we failed our entry opportunity around the morning session. So in the morning session, we didn't have any opportunity to take entry. Then market went higher. When market went little higher, it came here somewhere. Okay, I have to go to your 15 minute chart one more time. So on my one more time, I'm in my 15 minute chart, and I will look for another fair value from 15 minute chart. So this is that extreme 15 minute chart where market has traded. Okay, now it's time to look for another 15 minute chart, 15 minute fair value. So over here, when market went little higher, okay, just look over here, market came little higher, there market has made another 15 minute fair value. So if I would love to frame another setup, I have to make it from here, from there, because it has traded that 15 minute fair value gap. It left a lot from that 15 minute gap. So this is the liquidity taken. When market has taken the liquidity, it tapped to this 15 minute fair value gap. It went higher from 15 minute chart. So it went higher. That means it already gave me a run. I have to look for another 15 minute fair value gap to frame my trade. If I get it, I'll go for it. If I don't get it, any 15 minute fair value gap from there, I'm not interested to take any kind of entry. Okay, until this liquidity is not taken. Until it's not taken. So I'll be in 1 minute chart one more time. This is that new 15 minute fair value gap. So you can say finally market came here, take all of this liquidity. You will same way, you will look for market structure shift and market structure shift entry. Now you can see there was no market structure shift, clean market structure shift, and no entry opportunity in the morning session. What does it mean? That means you just missed your entry. The morning session, you didn't get any entry. So market is not going to give you the A plus setup every single session, every single day. Now, every single day you will get at least one, but not in every session. Okay. So over here, you didn't get any setup, but there was a setup. I will explain it little after explaining the PM session. Okay. So when I will explain, I will be done with the PM session. I will come back and I will explain the AM session entry. There was an entry. I took that, and yeah, I will explain that after explaining the PM session. So finally, market has taken that buy side liquidity, then it fall. Now, when it is falling, am I looking for a sell? No, I'm not looking for a sell. Why? Because from daily chart, I have already know that my point of interest is this buy side liquidity. Okay, this is that Friday candle. Until this buy side liquidity is not taken, I'm bullish. I'm just bullish. So here in 15 minute chart, when market has taken that 15 minute fair value gap, and I find out that market has tapped to that 15 minute last fair value gap or the entry fair value gap. I guess that was the last fair value gap. Yeah, that was the last fair value gap actually. So let me mark it here. So look over here, random reaction. Okay, don't think there is anything random. Market always go to 15 minute fair value gap to 15 minute fair value gap every single day, but it actually go through toward the liquidity. So market came here to that 15 minute last fair value gap. It went little lower. Now when it is going lower, I'm thinking that this is just a reaction. Okay, from the last fair value gap reaction. Still I'm bullish. I'm not bearish. So I'm not looking for sell. I'm just gonna sacrifice all this lower run. At the same time, I'm looking for 15 minute fair value gap. What type of fair value gap? Either the entry fair value gap. This is the entry fair value gap. Here. Sorry. This is the entry fair value gap, and this is the last fair value gap. So over here, this is the last fair value gap. If market can reach any of this fair value gap, I will frame my buy setup again. Again, I will look for buy setup. Now from 15 minute chart, you can see market how beautifully went lower. So what this guy is telling us? Is he mad? Let's see. So I got another 0.2, right? Remember the 0.2, go to your hourly chart or 15 minute chart for liquidity and fair value gap. So over here, I came to my 15-minute chart and I find out the fair value gap. Where is my liquidity? Now here, this is my liquidity. Why this is my liquidity? Because from our, daily chart, I know market is going toward that. From in a short period of time, I don't have the liquidity already. I don't have that, but I can see this high and that high. They are relatively equal highs. Okay, this candle and that candle. See, also the shallow run. So this is kind of my buy side liquidity. Now new buy side liquidity is over there for me. This is my new buy side liquidity. So I will go toward that buy side liquidity now. At the same time, I got the fair value gap. Remember, the first two line is the entry fair value gap. This is the last fair value gap. Now I'm going to 1 minute chart again, and I'm going to mark the PM session. So the PM session is start from 1. So here is your 1 candle. There is your 1 candle. When price came to that entry fair value gap for the first time, this is the first time price came to that entry fair value gap. See, then it went higher. I have already started to look for buy setup. What do I mean by that? Market has to take some liquidity, market structure shift, fair value gap entry. Was there any market structure shift? No. Market went lower, 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 and it has broken the entry fair value gap over here. When it is broken, I'm going to remove it from my chart. So I'm just going to remove that entry fair value gap, but I'm going to keep the last fair value gap to my chart. Okay. So finally, price came to that last fair value gap and gave me the market structure shift. This is a swing high, which is valid for shifting market structure. So that is the market structure shift. Every single time, I'm just looking for buy setup. After shifting the market structure, I will look for a fair value gap and an immediate reaction. So there is the fair value gap over here and the immediate reaction. That means within 3 candle, it has to trade that fair value gap. You can see the very next candle trade that fair value gap. So I'm gonna take my entry over there. I'm gonna put my stop loss below this low maybe. Where is my entry? Now I will look for that buy side liquidity over here, but I have to take partial depending on the 1 minute 1 minute liquidity. Okay, what do I mean by that? See over here, go to your 1 minute chart and look for your setup model and target profit. That means this 15-minute liquidity is an extreme liquidity. Never go for that extreme liquidity. Instead of that, look for some kind of relatively equal highs from your 1 minute chart. Okay, so over here you can see this swing high and that swing high. Okay, or if I just mark it over here, this is relatively equal highs from 1 minute chart. So it's my buy side liquidity, and from 1 minute chart I'm gonna hold my target over there. At the same time, I'm going to take a partial just below that buy side liquidity to the last fair value gap. So here is my last fair value gap. I have to take a partial to that last fair value gap. Okay, so this is my entry, and you can see it gave me the partial. So if you go until here, it's gonna be near about 33 handle. Not bad. 1:2 risk to reward ratio. Why I put my stop loss below that low? See, this is relatively equal lows, so market can tap over there, though it should not do that, but it can go until that line. That's why the best option is to put your stop loss over here, but it's huge stop loss 21. So I'm gonna put my stop loss just below that's relatively equal lows. So even if it tap to that relatively equal lows, I won't be stopped out. But finally, market go over there, and this is your A plus setup. The easy way to find out this setup, and don't take any panic when market is falling. Anyone, okay? So this should be your A plus setup. Now over here, as I told that I will explain, here was an entry. Okay, when market came here to that 15-minute fair value gap and it went higher, the highest up close body close candle is your breaker block. So over here, that is your breaker block. So you can take an entry to that breaker block, and remember the relatively equal highs. So there was your relatively equal highs over there, and there was an option of the relatively equal highs to take partial over there from 1 minute chart actually. So these two level. Okay, so if you want to take an entry over there, so you can take entry over here, and your stop loss will be just below that breaker block. you can hold your trade until here, but you have to take a partial around that buy sell liquidity as well. Okay, so there was two entry over here, that was the breaker block entry, but at your beginning I'm not suggesting you to look for that breaker block entry because you will be confused by that breaker block. Trust me, most of us don't know what is exactly the breaker block, so please don't go for that. Instead of that, go for that 22 IT model. It should be your A++ setup. Now here I'm going to show you the execution I took in Friday. You can see there was an entry. This was the first entry. Actually, I took the order block entry. Actually, let me show the level. Okay, so here I took an entry at 539 and I got stopped out at 540. That means one handle. Just taking my entry over there, I got stopped out over there at the break even. So that was my first entry. I got break even. Then I took my entry depending on that breaker block, and you see I took a partial here to that line and another partial here to that line. So that was my breaker block entry. And then finally this entry. Okay, this candle, look at this candle, just this candle came to that tap to that fair value gap. I took my entry, and over here I took a partial to that last fair value gap. Then I got stopped out. I moved my trade. I trailed my stop loss over there and I got stopped out because I was expecting price will go over there and it will actually take that buy sell liquidity, but it didn't do that. From the last fair value gap we got the reaction, sorry, the reversal, and market actually came lower. Okay, to take that relatively equal loss. Remember this relatively equal loss I talked about here, this low and that low. So market came here and see it has taken that relatively equal loss. So even if I took that entry, maybe I would be stopped out over there. Let's not. But yeah, it has taken that relatively equal loss. Come back again and take that relatively equal loss. So that was the explanation. This is your A++ setup. This one, not that one. Breaker block. You are going to learn that one as well, but not now. Later you will obviously learn that setup as well. But if you really know how to use the breaker block, you can go for that. All I mean to say, this is how you will look for your A++ setup. Okay, so I tried my level best to explain the price action so that you can understand how should you look for your setup. How can you don't be panic when you will see the opposite run. See this, how beautifully market went lower. You won't get panic by seeing that type of run where market is going to fall. You don't take any panic because market is going to fall. No, you are not going to get panic for over there. Okay, so I believe that it's gonna be helpful for you to read the price action in a different way. Okay, in a different language. First you have to go to your daily chart. From your daily chart you will look for your liquidity and fair value gap, where should you take your entry. Then you have to go to your 15-minute chart. If everything is fine from 15-minute chart, you don't need to go to hourly chart. If it is very sloppy or very bad price action, you have to go to your hourly chart. From 15-minute chart you will look for the fair value gap. Toward your direction you will look for another buy side liquidity. Okay, from your 15-minute chart, so another buy side liquidity. And when you will get everything, you will just wait to price reach to that gap, or here reach that gap. When it will reach to that gap, you will go to your 1-minute chart. You will just look for a perfect market structure shape or breaker block entry, order block entry, whatever you want. My suggestion is to look for only 22 YT model. That means market will take the liquidity, clean market structure shape. It will be easier for you. Maybe you are going to miss some session, but still you won't take any loss. Instead of that, you will get the profit. Okay, here was the summary of Friday. You see, no red line, and I did it all to my life, not price hindsight. I guess this is going to be a little longer video, but still I tried my level best to explain everything. If you are new and if you think it's helpful for you, don't forget to give me a like. Don't forget to subscribe to my channel, share my link to new people so that they can join to my live, they can join to my video and they can learn something from here. Okay, so until the next video, cheers.